What's up, everyone? My name is Kevin and I'm from Bitcoin for Beginners. And today I want to talk to you about your taxes, particularly if you are a US citizen. Now, many people in our crypto communities have been asking about this because tax season is coming real soon and people are dreading having to figure out how their crypto dealings will fit into the whole process. And so I took some time to do some research for you. I want to share with you an update because of the new tax bill and dive into some examples that I hope will be helpful for you. So if you haven't already, one of my most popular videos I made months ago was on Bitcoin taxes and how to make sense of it. I did a lot of in-depth research from like Investopedia and other sources I can find online and compiled into one presentation on YouTube for you. I will link you in the description below and after the video as well. So who cares about this? Well, I do. And I know a lot of you don't want to deal with this or don't want to pay. And that's your own choice. But I don't want to mess with a tax man. Because recently, if you haven't heard of it, IRS won a John Doe summons case versus Coinbase that they've been litigating in court for quite a while now. And so now Coinbase has to hand over info about people with over 20K in total transaction value in the past few years. So I don't want to have to worry about getting an IRS audit because those can span back several years. That's what the statute of limitations is all about. So for assessment, they have 3 years to do so and 6 years for substantial omissions. If your crypto gains are a lot, then that may count for a substantial omission. I'm not sure, but I wouldn't take the chance if I were you. And to collect, it's 10 years after the assessment period. So that's a long time afterwards that they can still audit you and get you for your taxes. I'm probably just going to hunker down and figure out this big hassle so I don't have to worry about it later. So what's the latest on this? So the IRS has already told us that they're going to treat this as property, not currency. So this means that capital gains laws apply. And so you have your short-term capital gains versus long-term capital gains. I'm not going into too much detail about this, but my other video that I mentioned earlier does dive into this a little bit more. So the bottom line is if you just buy and hodl and that's it, then you're good. Don't have to pay any taxes until later. But if you do anything else, it's most likely going to be taxable events. So that includes trading, mining, purchasing goods and services, donations, payroll, and much, much more that many people use the crypto for. So one big piece of information is LikeKind Exchanges. A lot of us trade often Bitcoins for altcoins, altcoins for other altcoins, etc. And so we hope that we can claim LikeKind Exchanges and defer taxes until we cash out to fiat. Unfortunately, these do not apply. And this is always in the gray area, but it has been clarified by the new US tax bill because it applies only to real property. So this means that crypto-to-crypto trades are taxable. So if you have used services like Shapeshift, Changelly, EtherDelta, etc., a lot like I have, you will need to get all your transactions for that and figure out gains and losses. So basically the bottom line is you need to calculate gains and losses every time you trade your coins, from like Bitcoin or Ethereum to altcoins to each other, etc. And this must be determined in a consistent manner. So you have decisions to make like first in, first out, last in, first out, and also a consistent way to determine the equivalent USD price of the trade at that particular time. So just a snippet from an article mentioning the new US tax bill. This was on Fortune, and Suzanne Walsh, a partner at a law firm, stated that the Tax Act in Section 13303 amends IRC Section 1031A1 to delete property and replace it with real property. So now they're really clear. This is like real estate, not cryptocurrency. So here's an example that might make things a little bit more clear for you. I'm going to take some time on this slide, so hunker down with me and take a look, okay? I've decided to use the FIFO method because it's more common and take the price from GDAX at time of trade. So as you can see, this is a spreadsheet I just threw together. I have the type of trade, the date, quantity, the coin, the ratio to BTC, equivalent amount of BTC, price of altcoin, overall cost, and gains/losses. So as you can see, I did 3 separate buys of Bitcoin at different times for different amounts. And these are Bitcoin, so the ratio is 1-to-1, equivalent Bitcoin amount, price of Bitcoin, overall cost. And then I made some trades for Ethereum and for Litecoin, okay? At different dates, at different amounts, different BTC ratios, and the price of BTC has gone up since then. So these are gains, okay? And then I do some sells as well. I sell some BTC straight up, get some gains, and then I sell some Litecoins that I bought earlier at a loss. And so these are losses. And so at the end, I need to sum up all my gains and losses to decide how much I've made or lost and include this in my taxes. And so if you're confused, let's just break down a couple of particular items, particularly this first one, this gains and losses. Okay, so this is why I put equivalent BTC value. I traded for 6 Ethereum, okay? And this was 0.45 BTC. So because I'm first in, first out, I'm coming from this 0.5. And so I do that calculation, 0.45 times 10,000, that's the price at the point, minus 0.45 times 3,000. And that is my gains because my Bitcoins that I got back then has gone up in price. So I need to calculate the gains that I've made from that. Now this gets a little bit more complicated. So I got LTC as well for 0.34 BTC, but there's only 0.05 left from my first purchase, from my first grouping of BTC that I bought. You have to think about it in separate groups depending on when you bought them and for what prices. And so out of this 0.34, 0.05 is going to come from this first one, and then 0.1 is going to come from the second one, and then the rest, 0.19, is going to come from the third one. So if you add that all up together, 0.19 plus 0.1 plus 0.05, that's going to come up to 0.34 like I mentioned earlier. But you need to calculate them at each specific BTC price. So 0.05 times 3,000, as you see up here, 0.1 times 5,000, and then the 0.19, the rest of it, from this 1.2 BTC purchase at 9,000. And so you take your 0.34 equivalent BTC from your 10.25 LTC purchase, times this $13,300 worth of Bitcoin, minus the rest of it summed together, and you get 2,162. And so you can take this method and apply it to all of your future purchases, trades, and sells, and other taxable events, and you need to track it very carefully like I've shown you here. And then sometimes it's going to be at a loss. If you trade your altcoins and the altcoins have dropped in price compared to what you bought it before in terms of USD value, then you can claim that as a loss and add it all together. And so I hope this example makes it a little bit more clear for you. You can definitely slow this down, watch it a few more times, look at my spreadsheet for more clarity, and try to figure out the math. Definitely leave me a comment below if you have any questions about this though. And so this is definitely going to be a hassle because I'm on a bunch of different exchange and services, like I use Shapeshift, Changely, 10 different exchanges, and also have sent my coins from wallets to wallets. It's going to be a total hassle to keep track of if you haven't done it from the beginning. So definitely a good thing to do is to look for some tools to help you with this process. A personalized, detailed spreadsheet is probably the best idea, but if you want some things that are a little bit more automated, that's definitely out there as well. For example, Bitcoin taxes, Bitcoin.tax is their website. Coin tracking, LibreText, there's a lot more services. And I'll probably make some review videos of these later, so definitely click on the subscription button to stay notified for my review videos of these. But there are also many other choices out there in terms of software to help you track crypto trades, gains, losses, etc. So definitely do some Googling, do some research, and look for those. Let me know as well what you find. If there's one that blows the rest out of the water, I would love to hear and try it out. So if you have many questions, as many of you might have, definitely be sure to ask a tax professional. I am not a tax professional, and I don't claim to be. So take everything I've said with a grain of salt, do your own research, ask a CPA that specializes in crypto, and be sure to do your due diligence when handling your crypto taxes. So if you have any questions or comments, please leave me a comment below. Give me a like if you enjoyed my content. I'm going to put out more videos trying to help people clarify this topic. Subscribe, click on the notification bell, and I will see you next time.